What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
All right, welcome back to The Last Trade. Happy New Year to everyone. We are now in 2025. For this week's episode, I'm joined by my co-hosts Michael Tanguma and Brian Cubellis at Onramp, and our special guest, Tim Kotzman. Gentlemen, how are we doing?
Very
well.
good.
Happy New Year, boys. It's been a little while since we've ripped, so it feels good to be back.
It feels very good to be back, and we've up leveled. We have suits on the podcast now. Tim has showed us up, so I think next step is we have to start these boxes. Everyone has to put on a suit for the last trade.
Yeah, Happy New Year. I've had at least one person I've had on my pod say that they would put on a tie once we hit 100,000, so I need to take him up on that here pretty soon.
And I need to order some orange ties so I can fit the bill here. But Tim, it's good to have you on. Excited for this episode. Really appreciate the work that you're doing in the space. For people who aren't familiar with your background, just give a quick blurb. You're the host of the Bitcoin Treasuries podcast and the founder of multiple energy-focused private equity firms, including Jubilee Royalty, where you're the founder and CEO. Tim, your podcast has seen a lot of success and growth, and I know you had only started it sometime in maybe the second half of last year in 2024. So could you just tell the audience a little bit more about yourself, the podcast that you're working on currently, and how you got into this space? Because I think it's a very interesting story that you have to share.
Yeah, absolutely. It's been a wild ride because to start with the podcast, we really started it kind of accidentally in the beginning of October. And once we saw that, someone actually wanted to watch it, we just kept going. And to really see one company to, MicroStrategy, and then see not just one company and then that's it, but one company a year, one company a quarter, maybe one company a month now, if not more, publicly announcing that they are looking to adopt a Bitcoin treasury strategy. Probably just good timing to have a show called the Bitcoin Treasuries podcast. My background is on the land acquisition side of oil and natural gas, which is a little bit of a misnomer because really my background is just going out and acquiring the right to develop through either a lease or a purchase agreement, the commodity, whether it's natural gas or oil. So think, Pittsburgh, Pennsylvania, Ohio, West Virginia, West Texas, New Mexico. I was on the deal side for a long time. When I moved to New York 5 years ago, started Jubilee in order to do the same deals, but just raise private capital, let the deals cash flow and sell those deals. And then along the way, specifically in January of 2021, one of my investors came alongside me and said, hey, there's this thing called Bitcoin. So 4 of our 5 closed-ended funds now are oil and gas related. One is a long-term buy and hold Bitcoin fund. Really excited to just go into 2025 focusing on covering the Bitcoin treasury space, Bitcoin overall, but specifically more on the corporate side.
Appreciate that, Tim. And before we jump into the treasury side of the conversation, I'm curious just to hear a little bit more in 2021 when Bitcoin was introduced to you. Was it intuitive from the start of that conversation? And did that have something to do with the energy background, or was there something more that helped to contribute to your understanding of Bitcoin and the fundamentals and monetary properties that it exhibits?
I think the background in commodities definitely helped, but I think I may have even done a disservice by saying like, oh, Bitcoin is like gold or like oil or a commodity. It was more so, I think, the combination of a personal relationship with someone that was a real person that spent a considerable amount of time with me one-on-one, through FaceTime calls, in person, actually sitting down and saying, hey, I've put the majority of my liquid net worth in Bitcoin, and here's what happened. I mean, just that. So, because I've always said I can only get so much conviction from watching a YouTube video. Um, so having that actual person, and that's why I've, really enjoyed meeting so many people in the space as often as I could, whether it was, you know, going to the Bloomberg office for an event or traveling to El Salvador and meeting Max and Stacy, or it's just like Bitcoin can be kind of hard to understand and grasp from a non-tangible standpoint. So for me, that relationship part of it was a big part of it. And then I think the other side of the coin that really helped was the fact of that there is a scarce asset. Like, yeah, there's technically oil and gas mineral rights underneath every acre of all the land in the world. But in specific pockets like West Texas or Leonetti County, New Mexico, we were paying $5,000 an acre, and then 10 months later we were paying $50,000 an acre. I mean, it was the same rock, but it was de-risked. And I think that's, some of what I'm excited to talk about today, and that I've been trying to follow and really have as informed of an opinion as we all can have without being, extolling that we're experts. I don't think they're, the guys that know the most about Bitcoin will say, I'm not an expert.
Yeah,
But yeah.
yeah, I think that's it's super fascinating and something we've seen for years now is individuals with backgrounds in the real world, effectively, whether you're building a business, you're an athlete, or you're in a commodity-based business, you have to deal with inputs and outputs and see inflation or see what assets come out of the earth and can be transferred into dollars. We saw this in Texas where I always remember the saying from a landman he referenced, good friend Griffin Habey said, it all clicked for me when I realized there was no such thing as stranded energy anymore. And you see this in the Middle East, right? We know that they're stacking. They didn't just stack to buy Bitcoin. They had to understand it deeply, and they started more than likely by mining first, right? And knowing that, this similar in Texas, you start mining, you transfer it directly to USD, and then you're realizing, wait, this thing goes up. Now I got to go dig deeper because I understand, commodities and energy-backed money. But while that's interesting because you're sitting in a suit in the middle of New York City, all around those buildings, and your probably peer group or a large percentage still think of this as a trade, a speculative asset. And I think that's that difference when it becomes less, when it's ephemeral, it's academic in nature, it's hard to understand what's happening here. So just curious, like how you saw that tie for you, and then how your friends in other peer group are probably, and tell me if I'm wrong, or still in that other camp of like, this thing is like, it's a number on a screen and I'm trading it similar to like, MicroStrategy and the options and all of it, but they're not looking at the underlying, which is the real kind of like disruption in our opinion.
Yeah, I'm not sure if it's because Bitcoin doesn't have cash flow, but um, I've never been in an employee seat in corporate America, which I think is a huge advantage, but it's probably weird for a lot of people to hear. So I can only assume that in the same way that most people still think in a 60-40 portfolio sort of way, and maybe now we're in 2025, but it might be another 12 to 24 months before people, even like regular people, the everyday person on the streets, actually realizes that BlackRock is now saying like, oh, you should have 1 or 2% of your portfolio in Bitcoin. That probably still sounds radical to most people. So,
And it takes a while to permeate, I think, to your point. Like,
yeah,
BlackRock came out and said that, however many weeks ago, but the average person is probably not even picking up on that. And you said something else earlier, which I think is often overlooked or underthought about, is like the social proof in terms of its effect and its impact on adoption, in the sense that, like, you could read all the information or watch a ton of YouTube videos, but like hearing it from, a close friend who's been in the space, who's, quote unquote made money on Bitcoin, just has a different cachet and a different ability to actually influence someone's opinion. And really all you're describing is like what it's often called as, like, Bitcoin is a mind virus. That's all that is playing out, right? Like each new node or person on that playing field, groks it, tells friends, tells close confidants, colleagues, and then it just spreads. And part of that too is there's a time element to it too, right? Because if someone is in the trade for a month, that's a less credible social proof to their friends and family than if they've been stacking Bitcoin for 5 years and seeing like incredible appreciation as, you know, this savings technology as opposed to a trade. So it's not only just like this web of trust that's ever growing, but there's also a timing component to like how long that person has been in and do they actually have credibility in what they're saying.
Absolutely. You kind of took the words right out of my mouth with, I was just thinking, the social proof could take some time depending on where in the cycle or where in the price someone came in at. If you buy quote unquote the top, you know, maybe you're waiting 2 or 3 or 4 years.
Right. Your social proof is negative for a little bit.
But that should actually be a positive insofar as this is not something to get in and out of. It's something to hold. And when I've had people reach out to me over the last several years, when should I buy it? How much should I buy? Well, you know, I would really love if you studied it, made your own decision, and then whatever amount that you would like to hold for at least 4 or 5 or 10 years is probably the amount that you should buy.
Which is amazing for the opportunity because it's still non-consensus. And to the point, like the Druckenmillers and the Paul Tudor Jones, these investors have been in early, but they still aren't consensus driven. It's not like the BlackRock stepping in. And so this kind of ties in. I don't know if this is where you're going, Jackson, but it's just like Michael Saylor, MicroStrategy is still like on the edges. And it's when we see like these big, you know, and it's not a rumor, it's just like, you know, a Meta would have more of an angle to do something given their ownership structure. And cash, when somebody like that steps in, it starts to become de-risked from the angle of, okay, well, some larger firms, larger players are doing this. I can't lose my job now from doing it because BlackRock said 2% position versus just because one asset manager did.
You guys think it's like it will take kind of a united front from the institutions saying 1 to 2%, not just like BlackRock, like end of 2024 saying 1 to 2%, and then you have like Bitwise saying 2 or 5%. Whoever's saying whatever, right? Somewhere between 1 and 5%, but it's just not consistent and it's not everyone. Like it's not like the ETFs are widely available to everyone. That's actually not even true.
I think a big piece of that is, I think a big piece of that is getting Bitcoin into indexing. And so Brian and I have spoken about this at some point on the show before, but the idea that once active managers have to compete against an index that has Bitcoin as part of that portfolio composition, and if they're actively not allocating to Bitcoin or they're under allocating to Bitcoin relative to the index, and that's causing underperformance, I think that'll be a very tough conversation for fund managers to have, and that'll be a flywheel effect where they'll effectively have to allocate to Bitcoin to at least maintain that target allocation or exposure to the index to not underperform. Then, of course, you could, if you're an active manager and you're looking to time the markets, maybe you could underallocate to Bitcoin relative to the index if you're anticipating a bear market or some sort of catalyst in the industry that could be negative for the price. But I think over the long term, just what we see is that the price goes up and to the right. And so if you're terminally or over the long term, you're underallocated to Bitcoin relative to an index, that's going to cause underperformance over the longer term, which if people are paying you money for, they're not going to be happy about that. I don't know, Tim, if
I mean,
you
the
have
key
some
part is
thoughts there.
it shows up on the screen, right? Whether it's like an attribution report on a quarterly basis or even a monthly basis over time. And maybe the first flavor of this we get is MSTR being in the NASDAQ. Like that starts to show up as if you have no exposure there, then that's a key detractor on your monthly attribution report is that you actually have an underweight relative to the index there. But yeah, Tim, would love your thoughts on that.
Yeah, I think an announcement or a analyst note about allocation isn't getting it done. It's got to be something that everybody can see on the screen that they're falling behind. There has to be a consequence. It can't, like, okay, I saw a billboard, great. maybe I'll go to McDonald's. But like once there's something to lose. And I think that's what MicroStrategy and Semler and the follow-ons are what you'll start to see. And that's why I do think, just as a starting point, to be clear, that you will see 10% of public companies adopt Bitcoin as a treasury reserve asset. Um, that's what I'm saying right now. I think that could happen in the next 12 to 24 months, which might sound radical, but it's gradually, then all of a sudden with anything that you're doing in life.
Yeah, I think you can't like underscore the mimetic nature of like the price, this whole notion of just the number going up. Now that investors, BlackRock, people hear about it, now they start to demand it from whoever's managing their assets. But the other aspect of this was this that came up. I think we sent it to you late when you were at Sailor's party, which we appreciate you responding to when you were there. Maybe we'll hear about that from you, Tim. But it's this calculation from the top and bottom funds in 2024, and it's like once you start meaning the fact that these asset allocators, where you're paying, anywhere between what 50 to 200 bips to manage a portfolio and to underperform just holding spot Bitcoin, whether it's in an ETF or just holding the underlying, people start to question, what am I doing here, and why am I not just taking the path of least resistance versus all of these convoluted constructs. We see this in the crypto world where you have a top basket of cryptocurrencies are market weighted. So I think this would be another aspect of that whole, just like establishing a standard from a baseline return.
Yeah, I mean, maybe it's all of the fear, uncertainty, and doubt, and just the amount of regulatory risk. Because why would everyone not adopt Bitcoin in the first 15 years when it's like just the best performing asset of all time? Correct me if I'm wrong.
Uh, yeah, Tim, I think one thing it tied into what you said earlier just about the land, right? You mentioned acres out in West Texas going from 5,000 to 50,000, and that feels expensive, just as $100,000 Bitcoin feels expensive. But there's that idea that you mentioned of Bitcoin, or in your context, the land being de-risked. And I think what you just mentioned really ties into 2025 and going forward now is, yes, Bitcoin is at all-time highs. It feels expensive if you're backward looking at the price chart, but if you're not actually digging into the fundamentals, you're really missing the bigger picture here, right? Like why do you think, you don't have to answer this right now, but just just like, why would 10% of the companies that you said publicly traded, you anticipate them adopting Bitcoin in the next 12 to 24 months? Why would that happen today or this year and not happen 5 years ago? And it's probably in part because there is a lot more regulatory clarity. It seems that you're going to have a administration coming into office in the United States that will not be adversarial to the industry. They'll actually want to help the industry grow and have the US be a leader globally as it relates to Bitcoin. And so I do think, even though Bitcoin feels expensive for someone looking at it, really it feels inexpensive if you weigh the risks and uncertainties that exist today compared to 5 or 10 years ago. They were far greater.
It is worth calling out the custodial risks, though, because Brian eloquently put, until this notion of multiple institutions holding the underlying, you've always had a single point of failure, whether it's self-custody or a third-party custodian. And so there is that background knowledge. While individuals may not fully understand Bitcoin, they do know that if they allocate, there is a world where they wake up and the next day the institution failed. That's what 15 years objectively have provided the market. So that kind of ties into your point, Tim, of like, A, yes, it's been the best performing asset, but B, you have that secondary part of like, well, it just shit keeps getting lost, whether it's I lose the private keys, and the tropes that are common is like the landfill in the UK or the exchange or North Koreans take it. Like it's just these two versions. So people are like, well, how can I really underwrite this in a material way? And so I do think that will still be a stigma because again, if it comes to like a Berkshire or whatever and says, look, I want 10%. Well, now how do they do it credibly if they go and get the best people on their team to go figure it out? And they're like, well, it seems like Coinbase seems to be a problem here if we're going to put 10%. So that's really like part of the market structure when it comes to custody and taking that. And this is just a newer asset, so it has to be looked at in a new way.
Yeah, absolutely. I think sooner than anyone can imagine, you'll be able to walk to the bank on the corner, you can go to Chase and buy Bitcoin. I don't think that's on anyone's radar. I think it's going to happen, as soon as the new administration gets in there. Not immediately, but then it's still, even if it's too big to fail, um, yeah, you want multiple institutions that are too big to fail holding one of the keys to the most important asset that you're ever going to own.
Yeah, that's exactly right. Because I think there's this notion, to your point, of like, once the banks get turned, like, quote unquote, turned on, obviously they're going to want a piece of this, and they're going to want to, allow buy and trade of the asset, leverage against the asset, and they're going to have to figure out how to custody it. The question in my mind, which I am not fully sure of how this plays out just yet, is like, do they just outsource it like BlackRock did and say, hey, we're just going to use Coinbase as a sub-custodian and allow people to access it through our platform? Or do they go the route of trying to build something themselves, which realistically could take several years to do it the right way, at least? Or do they see a third vision of the future where it's sort of a hybrid approach, where they get involved in something like a quorum of institutions, and in that sense, you're only then responsible for holding one key? So it also de-risks it from the perspective of, if you're entering the space as a financial institution or a bank, like, do you want to then become a single point of failure yourself, or do you want to be involved in a quorum where you only have a third of the counterparty risk, and you actually can't lose client assets if you were to screw up your security around your singular private key in that quorum? There's actually an elegant way there where these banks could get involved sooner rather than later, in a way that isn't just outsourcing it to Coinbase. But yeah, that's still an open question in my mind, and how that plays out, and also like the timing of when they get the ability to actually execute on any of those ideas.
Well, there's a few things to pull on there that are super relevant. Like, Tim, that's pretty astute that you're saying, like, banks, you'll be able to go down the street, because I hadn't thought about that, but it's true. It will be here sooner than we all imagine, because they tried for this. I don't know if you guys saw around the recent Operation Choke Point 2.0 stuff that I think Nick Carter was first cited with, calling out NYDIG back in 21 had established partnerships with FIS and one other intermediary that effectively serves as the tech layer for these smaller kind of like credit unions and other banks that don't have the operational or technical chops to build the infrastructure from like web applications and other things like that. And it never really took off. And the assumption was that because the market didn't really want it. But we know that these credit unions, these other smaller banks, are trying to compete with the large four. And so the assumption was, or there was some, again, a lot of this stuff, it's my understanding, is kind of like, it's not to the purview for the rest of the market because all these things are confidential. But some of the stuff that's come out with the Silvergate and Metropolitan and Signature banks with the proceedings, that it had been stifled by the administration from actually letting them bring that to market. So we know that if we take that, the demand's there, and if the administration is friendly, you naturally can start to see that. But the second part to that, which is what we run into, is it really takes sophisticated first principle thinkers, from an individual to a financial service firm, to say, well, why am I going to focus only on Bitcoin and think about that? Because most players are going to come in and look at digital assets as a sector and say, well, I need to support it all. And that's how you end up with like Fireblocks and multi-party computation and using Coinbase and like all these things that are still like 4 layers deep into understanding this space. So we still have, again, we're still early, a long ways to go. And most individuals are probably going to just like adopt a Fireblocks, Coinbase, BitGo, kind of like throw it all there, let the clients pick. And we kind of know how that goes, because every cycle is kind of rinse and repeat of newer things that are flashy and shiny from a unit buys compared to Bitcoin. And so it's kind of a long-term bent that we have, but it all ends with like kind of Bitcoin as the blue chip.
Yeah, and I just remember there were several announcements that, I mean, they were public announcements of like Coinbase partnering with PNC Bank. And I would go into PNC Bank and say, "Oh, when are you guys gonna announce something?" Oh, I have no, they're like, "We have no idea." on the retail level. And it seemed like there was a little bit of like I was, several years ago, like excited, and then it kind of turned into this false start because of everything that you just mentioned.
Yeah.
And from a consumer side, there's going to be more demand for Bitcoin going forward. I mean, it certainly has been in the past 4 or 5 years, as people need to have a vehicle or savings technology to preserve their wealth, right? I mean, none of us, I'll speak for myself at least, I don't use a savings account. I don't think I've ever had a savings account. My checking account that I try to hold as little amount of dollars as possible pays 0%. And so naturally people, especially millennials, Gen Z, if they're thinking about saving for the long term, they're looking for opportunities to actually preserve and grow that wealth for the long term. And Tim, I think it would be great if traditional financial institutions do step in and recognize that Bitcoin has mass appeal already with these younger generations, and everyone will be able to win because people will be able to park some of their earnings into Bitcoin and grow that for the long term. And then these banks and other financial intermediaries will be incentivized to do so as well, because they want to go to where the puck is headed, right? And they want to make money from a new technology or new asset that is only having an exponential adoption curve. So I think it'll be really interesting to see what happens there, but I do feel a little bit uncertain as to what the timeline is and what those integrations look like for traditional finance.
One other sort of corollary to what you just described, Jackson, is like, it's not just people waking up to the monetary realities of this asset, Bitcoin, and why it makes sense as a long-term savings tool, but it's also like the degradation or the erosion of like what has worked for the past 20 years. So whether that's just piling into SPY or other index funds and fixed income, like I think we all know pretty intuitively why it doesn't make sense to own fixed income going forward in a world where just the unsustainability of the debt is becoming ever more clear to the market, and mathematically that that principal paid back at the end of these bonds is just going to be worth way less and value way less. So in real terms, you're getting wrecked effectively. And then on the equity side, it's like, yeah, there's still going to be individual companies who are able to outpace inflation over the next 10, 20 years. But then it's on the individual to be a stock picker at that point. And the problem with indexing, while it may have worked or at least kept pace with inflation over the past 10 to 15 years, is we've all seen those charts of the, I forget what the exact numbers are, but the level of concentration of attribution of returns, so contribution of returns in the S&P is like 5 to 7 companies, right? So it's like you're not actually diversifying your wealth in a basket of American companies. You are really just betting on 5 to 7 companies and hoping that it continues to go well for those folks, right? So that's an ever more precarious assumption. And then the other side of, if we just are thinking about a traditional 60-40, which insanely or amazingly is still, like, I would imagine, recommended at a lot of advisory firms in the TradFi world. Like, I don't think that they've come to terms or come to grips with the fact that may not work going forward. And so I think that's probably still standard practice to like have that sort of baseline of a portfolio, and you sort of flex that up or down based on risk appetite and probably the age of the investor, the underlying investor. But that's the other side of it, right, Jackson? It's not just the attractiveness and the de-risking of Bitcoin, the asset, but it's like the precarious nature of like, okay, well, what else are you going to do with it? How else are you going to preserve wealth for the next 20 years?
At Onramp, we believe that Bitcoin is the most important asset of the 21st century. The hard part is securing it right. There are shortcomings with keeping your coins on an exchange, but also with setting up your own self-custody arrangement. Onramp solves for these concerns. Our multi-institution custody solution maximizes security and minimizes counterparty risk, ensuring that your Bitcoin remains securely in your possession, and provides built-in inheritance planning to ensure your family is protected as well. Onramp provides peace of mind for your Bitcoin journey, whether for your whole stack or for part of it as a complement to your existing self-custody setup. For more information, check us out at onrampbitcoin.com.
Yeah, for sure. And Tim, I'd be curious then to transition from the dynamics that exist for us as individuals into corporate treasuries then. How do these same themes, or maybe if you could explain first just how you think about managing a corporate treasury, and from the research that you've done and from the businesses that you've built? And then how do you see Bitcoin kind of fitting the bill there and playing a key role in corporate treasuries this year, next, and for the next decade?
So the interesting thing, kind of putting aside the ideal custody solution, is that putting Bitcoin on your balance sheet, especially now that we're in 2025, you have fair value accounting. I mean, if you can figure out the custody part of it, and let's even say we're after January 20th, and maybe we're at the end of Q1. It's not that complicated to put Bitcoin on your balance sheet for a public company, for a private company. You can literally go to hope.com and download materials on how to do it. MicroStrategy has open sourced it. I think the opportunity, hopefully not the challenge, the opportunity is just for those companies to be able to communicate what they're doing effectively in the market. Just publicly telling the story of why they're doing it and so on. In the beginning of 2021, I started putting Bitcoin on the balance sheet of my holding company and my 3 operating companies, and I just bought Bitcoin in those entities. So I think that's the kind of the catch 22 is it too early, and then is it too late? I mean, we're right at that point with this new administration coming in. So yeah, intrigued to hear what you guys think.
Yeah.
Any stumbling blocks might be.
Well, I
That
think that ties into that is the math is the math, the value prop's the value prop. I think the thing that has historically been a problem, something that Leishman's identified. I don't know if I'm going to get this exact term, but it calls the authoritarian orange dictator at the firms, somebody that has controlling. Think about your private firms, you're able to go and buy, no questions asked. When somebody has an individual thesis, it's one thing, but when they have to drive consensus at a board level or organization is when you kind of run into the buzzsaw, and then ultimately it's well, status quo, because you're not going to ape into a position. So now you're over 1%. It's the same thing we see with RIAs. Well, they believe in it, maybe all in. Are they really going to risk their firm's credibility or their credibility to go put 2% in a portfolio? So it's just this weird problem, catch 22, right? Because once you get the exposure, now everybody likes it. Unless it's goes down. But I think this ties into curious with your podcast and the segment that you're kind of crafted of listener, how that area of the market is tuned in to this asset class, and how do they think about the ETFs and the de-risking? Are they looking at it as that's interesting? Is it more of folks that came in via the MSTR because it's just a public equity that's super volatile, and now they're hearing about why it's volatile, which is the Bitcoin underpinning it? How has that kind of interaction been from the anecdotes that you've seen? Because I think that's a lens into the conversations and how individuals at the highest levels are thinking about it.
Yeah, even just to the True North live streams that we've done, the MSTR True North live streams, there's so much noise and people talking about that they're getting wrecked and they're leveraged and they're losing, they're now irresponsibly poor. And it's how are you going into 2025? Irresponsibly long, irresponsibly poor. But when I have private conversations, I especially one older gentleman that I've had on the show that's coming out shortly. He said, Tim, I really think this is important and entertaining and all these different things. He's but I'm just never selling my MicroStrategy in the same way that a lot of people are never going to sell their Bitcoin. So to try to answer your question, I think it's still early as far as me trying to really get a read on what the mindset is of basically the listener for what the material that I'm doing, but um, certainly what I've been trying to do is just put as much education out there. Like, well, here's the CEO of a leveraged ETF, and here's what they have to say, and here's the CEO of a public company that is putting it on the balance sheet, and here's what they have to say. And
You
I'm
think
not
there's you think
it,
there's an element of like
kind of trying to
MS
research. Yeah, go ahead.
you think there's an element of like MSTR or even the levered versions of it being like somewhat of a gateway drug to actually understanding the underlying like that's my sort of gut instinct is like there are a bunch of people in TradFi who maybe played around with stocks in a brokerage account who have come to MSTR, gotten involved in these circles on Twitter or wherever else. And to your point, like over the past few weeks, maybe they feel like they got wrecked because what it top ticked like 550 or something like that and is now back around 300. So they see that extreme volatility in the stock because it's a levered proxy to Bitcoin. And maybe they realize like, hey, maybe I should just own the underlying, and maybe they learn more about Bitcoin and its fundamentals as opposed to just this levered proxy. Do you see that at all, or have you seen that in terms of people coming in sort of like first and foremost to MSCR without a real understanding of the underlying and just enjoying the volatility until it goes the other way, and then maybe they wake up and realize, hey, maybe I should just understand Bitcoin and buy and hold that?
Yeah, I think it's almost certain that it's in both directions with Bitcoiners. And that's what I really enjoyed about some of the guys that I've been on live streams with is they say almost every single time we get together, like we own Bitcoin and we're not touching our Bitcoin.
Mm-hmm.
And then we own MicroStrategy. So I think it's a Bitcoiners seeing what else is on the market. And then there's I don't know if you would call it retail, but someone that's more equity based or
Mm-hmm.
more traditionally looking at a GameStop or Tesla or something that looks shiny for a moment in time, um, that may or may not have fundamentals, and then choosing to do that research. And I think to your point with the volatility, it's going to be this almost, well, it's just this never ending roller coaster of like, oh, I should have gotten in sooner and it's over. And oh, I should have gotten in sooner and it's over. And yeah, I posted a few weeks ago. I was at the post office on the Upper West Side, and I walk out Saturday morning. There's two guys in the mail truck, and I literally walk backwards, and I'm like, "Were you guys just talking about MicroStrategy?" And they're like, "Yeah," and I'm like, "Oh, I actually have a podcast where we talk about that a lot." They're like, "What? Can I? I'll follow you on X." And they're like, "Yeah, I mean, it's so yeah, it's run so much, it's probably over now." And I'm like, as I'm walking away, I just said, I think we're just getting started. So I like that's kind of where that thought came from is like the
Yeah.
volatility being the feature in the same
Mm-hmm.
way that the marketing department for Bitcoin is the price. I think that volatility with MicroStrategy will, on a faster clip than 4 years, bring people into Bitcoin through these equities potentially.
Yeah, I think that's the right take. I think there's a notion, and everyone knows the ideological, dogmatic version of just buy Bitcoin, hold your private keys, leave everything else alone. The reality is the world has gotten that like that should be right, but the problem is the world has gotten so crazy that these products are a symptom of how people need like this notion of clown world that holding an asset that appreciates by itself is just not good enough. So you need some dividends, you need some convertibility, you need all these different things to make it make
Leverage.
leverage to make it make sense. And so that kind of ties into the past week, where it makes sense and has legs, these convertible bond ETFs, because it's effectively giving clients that may not be interested in Bitcoin, but interested in downside protection with a conversion into something that has, some proxy for the appreciation of the asset without direct ownership as like interest. This is like the Strive ETF and Bitwise. That I can see that as an angle from a wealth manager to go to their client and say, look, this is the thesis, this is the angle. You have downside protection into the businesses, but then you have the upside of the volatility and the conversion. Like I think these are all these little funnels, but then as somebody sees that, they're like, "Wait, what's happening here?" And it's the same stuff as it happened for the first 15 years in Bitcoin. You buy it for like X gambling or to buy something nefarious, and then you're like, "Wait, this thing goes up. then you dig into it and you have to come in all these different angles. The levels have just like heightened given the where it is in the mind share and the liquidity of the public markets here.
Yeah, yeah, no, absolutely. My mind, it's kind of stuck now on this. You know, I feel very blessed that I met one person that had been, May of 2017 to me meeting him in January of 2021. You can definitely call that a cycle, but like, what are the chances of me meeting someone like that out of all the people in the world? But what if that volatility of MicroStrategy and that social proof, to Brian's point, happens every couple weeks, not just
Mhm.
once every 4 years, and like maybe you'll be lucky enough to meet someone that actually has had an experience over 4 or 5 years and that actually cares enough to take time to explain something to you. I think that could be pretty powerful.
Tim, did you dig in at all to the announcements from Strive or Bitwise around these convert bond ETFs? Anything noteworthy to pull out of those? I didn't look through any of the details, but just generally, I think my assumption it would be like market cap weighted, so it'd probably be predominantly MSTR bonds in there, and then some of the smaller firms that have adopted Bitcoin treasury strategies and begun to issue convertible debt. But what's your take on those, and any takeaways from anything you've read or researched on them?
I have not had the opportunity to go that deep. I definitely will be in preparation in a few weeks here. I'm going to be interviewing Matt Cole, the CEO of Strive.
Nice.
So, yeah, definitely need to get up to speed on that. And yeah,
Yeah, I think Brian,
drinking
the
it.
TLDR, my understanding is the Strive is investing in the bonds, and then Bitwise is I think the baseline is like the treasury of a publicly traded company has to have at least 1,000 BTC, so they're going
Right,
direct
so
at
they're
the
just going
companies.
into the equity
Yep.
of once. I got it. Yeah.
Tim, what are your thoughts around, or how would you describe how would you back, I guess, your prediction that 10% of the publicly traded companies will adopt Bitcoin on their balance sheet in the next 1 to 2 years? And second part of that question would be, do you see other companies using a similar playbook that MicroStrategy has with at the market equity issuances, convertible bonds, or do you see them just maybe more of a pure vanilla treasury strategy as it relates to accumulating Bitcoin on the balance sheet? So curious to hear your thoughts there, because I frankly don't know a ton about it and don't have many strong opinions as it relates to pubcos adopting Bitcoin. So I'd love to hear your thoughts given your background in the podcast.
Yeah, I mean, my opinion is that as MicroStrategy and Semler and Metaplanet and others continue to have this track record of success, and then you potentially have like somebody besides Tesla, which is a whole point unto itself. Like people kind of, I think, forget like Tesla has Bitcoin on their balance sheet. And it's just been sitting there for years since 2021. So it's not like there's been no adoption in the top tech companies. Um, but I think as you see a notable company that's a larger company even put in it's just an announcement, it's not a significant portion, I think that will be as much of a warning shot to the market as anything else. um, and I know that there are Bitcoiners behind the scenes, continuing to advocate for that with the top tech companies and other companies. So in the same way that, you know, if we're at 1% Bitcoin adoption, and if we have nation states putting it as part of their reserves this year, I just think that 1 to 10% move could be a lot quicker than you might initially think. But yeah, that's just my kind of position on it.
Yeah,
Why haven't we seen Michael Dell come out and put it on Dell's balance sheet? That's been bugging me for some time now. It seems like he's clearly a Bitcoiner, clearly gets it. I think he probably has enough voting control to like get it done. Why haven't we seen that yet?
Yeah, I don't know that it makes sense from a financial aspect, and especially if you have enough control. I mean, I just have to think, from like put yourself in their seat. Okay, well, if I have enough control, it makes sense financially, and whether or not you're super passionate about Bitcoin or not, like some of the reality here is like the announcement is the announcement for like a couple of days and then like everybody forgets about it. Like how many people have talked to you about Tesla holding Bitcoin on their balance sheet over the past 3 years? Probably
Mm.
no one. Which
Yeah.
is not necessarily great, but like the announcement's great, but like the track record of it is greater, I guess.
Mhm.
And the political capital internally you have to run without calling out a firm, like there's a very large asset management firm that's been involved in this space, but they've had to segregate the entity that deals in Bitcoin than the traditional firm, because even if they have controlling the family is controlling shares in the entity, you still have the natural bureaucracy that's been built in, the stigma around Bitcoin. And so even if you can get it through, it's like, is it worth it? Goes back to the RA and all these things. It's like this catch 22 is it's still so small, it doesn't move the needle, that you can have all the conviction in the world like we do, but then it still comes down to like you have to operate the business at the highest levels. And I'm not saying that's the reason for the Dells, not, but you can see how that like turns into a big friction point before making a move. But as we've talked about, whether it's like SBRs, ETFs further integrated into the traditional financial system, it gets a lot easier until it just becomes the status quo. And then it's like, why don't you're benchmarked against it? It's like, why don't you have a position here to offset against inflation or margin compression because of inflation?
Yeah, would love to talk about the strategic Bitcoin reserve, Tim, because I think that will really solidify the case for more corporate adoption, right? If you see at the highest level, at the political level in the United States, that there is going to be a strategic Bitcoin reserve. And then, of course, there's states that have legislation introduced as well. So I'd be curious to hear your thoughts first and foremost just on the probabilities that you see as it relates to at the federal level and or state levels. And then how does that tie into your overall thesis around Bitcoin treasury adoption?
Yeah, great question. Topical. Um, I don't know whether I've drank too much of the Bitcoin Kool-Aid. Like my favorite Celsius to drink at the office is the orange flavor. Like I can't make this stuff up. But sometimes I just get kind of exasperated when I'm on social media and they're like, the SBR is not going to happen. It's like when I say, have you been paying attention? Like, yeah, I'm being kind of sassy, but I'm also like, have you like seen any like read what's going on and then like try to put like 10 different things together to form your own opinion? Because I might not be right, but like just from an educational perspective, you have Samson Mao, who is saying $1 million Bitcoin is the baseline. I mean, he's literally focused on nation state adoption. Is there anyone else in the space that they're like basically full time job is nation state adoption? Like, I think he's like, that's what he's doing. And then you put together that Cantor Fitzgerald has come out and said, we are going to allow you to borrow against Bitcoin. We own a shitload of Bitcoin. Like those are direct quotes from Howard, right? You have Ross Stevens at NYDIG, and I think we might get into this even further later, but they're like, hey, we're going to loan against Bitcoin. And I'm sure there's several other announcements that I may have missed or that are forthcoming. You have like Michael Saylor, Fong Li, Sharish, like they all seem pretty excited and pretty confident in where this thing is going. You have all of the other publics. Um, you have Donald Trump himself, the incoming president, saying, number one, don't sell your Bitcoin. Number two, yes, we're going to do something like the strategic oil reserve. Well, okay. Could just be a political statement, but I don't think so, because then you put layer on top of that, and that's what I'm talking about. Like maybe like actually go like all I'm trying to do is gather information and then put it together for my own opinion. If you look at the clip from one of the most recent Anthony Scaramucci interviews, like, we have the votes for the SBR. Like, actually, if Biden wouldn't have vetoed it, Saab 121 would have been repealed. So, like, I don't understand where the negativity is coming from. Is it because the price like went back under $100,000? Is it because MicroStrategy didn't go to $1,000 in 2024? Like, where is like if
It
you
could
just
just be PTSD, man.
yeah
Like people
like
are just like
yeah
Well,
inherently negative and want to assume the worst.
yeah, people, because I mean, we talked about this in the circles that have been in Bitcoin for a while. Is there are a lot of people that have been loud about Bitcoin, both positive and negative.
Mhm.
Very short, very, very short Bitcoin. Like they just don't hold it anymore, right? Whether they were trading altcoins, whether they just have never been a believer. Like the notion that the U.S. government or any government could put this on a strategic reserve is so uh it boggles all thoughts of like I missed it, the trade's gone, it's gonna run away from me. It's like how can that happen? It's like it's old notion of why you want anyone to get a little bit of exposure because you can naturally look at it in a favorable direction versus to the point you're saying in a negative light. And I'm sure like everyone here on this pod there's every conversation, every hinting that this is going to happen. It's a geopolitical thing. There's a great report that's this is being released on Friday. That's coming out today, which is Thursday. That ties in from a geopolitical perspective why it makes complete sense and why the SBR is going to happen or some form of it. So yeah, I mean it's going to be an exciting 2025.
And
Yeah.
also to Tim, to your point on like some of Trump's statements, I feel like there's been a handful of them over the past several months. And yeah, they could just be political posturing, but at the same time, once he's in, and if he backtracks on any of that or doesn't do anything, or it's perceived as if there's not going to be an SBR, that will impact the price. And he, according to sources close to him, is viewing Bitcoin, the price of Bitcoin, akin to how he views the price of the S&P. And so if he doesn't now act on some of these things that he's suggested, or and it's not just him obviously suggesting these things, but if he doesn't act on it or at least follow through with a portion of it, he's going to see that like the price is going to react to that. He's not going to like that. So he's going to my base case is like, yeah, he's going to follow through on most of this because he wants to see the price go up, because he's viewing that as basically a barometer for his success.
Absolutely. I mean, what does he have left at this point besides legacy? Like,
Yeah.
there's okay, you want to make some money, you want to be recognized, and then you want to leave a legacy. I mean, that's literally like all of the levels of leadership. So whether you like the guy or not, I mean, you would think that's what he's playing for. And based on every historical detail you can pull up, yeah, like he's literally saying in private conversations, Bitcoin is the new oil, and he wants the S&P to go up. He talks and brags about the S&P going up during his last administration. So, yeah, we everybody wants the number to go up. It's going to go up anyways, and to the fact of if you can have a way to borrow against an asset and it's de-risked and allowed from a regulatory standpoint, um, that in and of itself, I think, is encouraging for the price, because I don't know anyone that actively, unless they're a trader, like wants to actually sell their Bitcoin. And I find it hard to believe that traders or even whales are really selling huge amounts of their Bitcoin, unless they somehow think they can buy it back at a discount.
Yeah, one thing that just came to mind, I was just kind of piecing this together as Tim, you were mentioning some of those points, is if you actually look back to the California gold rush in the mid 1800s, I think it was like 1848. I published a piece about this like probably 18 months ago, but I'm just piecing together some of these things now. And so when those initial findings were in, I guess what is now like kind of Silicon Valley area, back in the mid 1800s, there was a lot of initial skepticism that there was gold in California, right? And that skepticism remained. The people started making a lot of money discovering gold. People from other parts of the country were coming into California to extract or identify and extract gold from the earth. But there was actually a kind of a widespread disbelief of the American public until it was President Polk's statement. It was his State of the Union, I guess, later that year in December of maybe 1848. I have to look at the numbers again, but it's almost like similar here, where now that you have the incoming president of the United States posturing and signaling that there's going to be a Bitcoin strategic reserve, that's kind of like a President Polk moment in and of itself related to the California gold rush, right? Where now, if once Trump is in office here in about 2 or 3 weeks' time, and they move forward with the strategic Bitcoin reserve, that's really going to open a lot of people's eyes. Because even myself, I mean, I want to believe and I want to agree that it's going to happen, but naturally I'm a skeptic. I'm an adversarial thinker, right? I'm a Bitcoiner. I think somehow or some way we're going to get screwed over. But I feel like there's a lot of data and evidence and incentives, most importantly. Human beings are incentivized now to push forward with this. And I do think that this will be kind of similar to what we saw in the mid-1800s as it relates to the gold rush.
Absolutely.
Yeah, I think somebody brought up the gold rush recently, where it kind of does a little bit break down in the gold rush is like once it was done, a lot of the area was depleted and there wasn't a lot built. Like it was stuff built there and then it kind of like was gone. Where like this never ends. This is the gold rush that starts and then you continue to build services, the asset grows, it's still in its monetization phase. The point where I think people get screwed over and it's worth calling out is because we've talked about it a few times, is that the banks and everyone stepping in. I think State Street last week, it's been kind of known, but that like was publicly about building out their own custodial setup and some other financial products. Is the lending of the asset isn't just like uh, a de facto like it's going to work, i.e., you're going to lend against another financial instrument. You can manage the volatility. Something happens, you have bailouts. You have all these different like mechanisms to ensure that the lender or whoever's on the other side of the trade is made whole. What we historically have seen in Bitcoin, when you lend against the asset, the individuals that are naturally building those businesses come from traditional finance backgrounds, Wall Street. They ultimately have never seen that level of volatility before, and they also are not familiar with how the counterparty risk is measured and being naked. And so I do think that while institutions are going to come in, there's going to be a lot of tears and blood with that volatility. And so when you pick your counterparties, you're just going to want to dig deep in understanding the custody, how it's managed, the loan to values. Like we had a lot of experience previously in doing this in our previous firm, and there's a lot that goes into it. It's not complex, but if somebody comes in looking at it just like as you're familiar with MSTR and its volatility there, and you lend that asset out a few times, you may wake up and be off sides when the market naturally course corrects, and basically everybody ends up with a zero there because the person that lent the Bitcoin, and then you, because your counterparties can't deliver the Bitcoin or the dollars.
I couldn't have said it better. I had nothing to add.
Tim, I'm curious then, so I feel like we touched on a lot of the topics that at least I wanted to cover today. I did see recently, but maybe you've been saying it for a while now, that you have a thesis of $1 million plus Bitcoin in 2025. And so I'll come out and say, naturally, I'm skeptical of that, not because I don't think that you've done the work, but I just kind of look back to 2021, and I've always been skeptical of super cycles and people saying that they have, or price predictions in general. But I do think that this time does feel different. Again, I'm going to be adversarial until I see the strategic Bitcoin reserve be announced and go into motion. But I'd be curious, how did you kind of arrive at that number or that ballpark just in general? And is it mainly around the strategic Bitcoin reserve here in the United States? Is it sovereign game theory? Is it corporations? What do you think is like kind of the primary drivers? I'm sure there's multiple, but what are you kind of paying attention to this year, and how did you get to that figure for 2025?
Yeah, I think it's a combination of everything we've discussed. I think the primary drivers in my mind are one, sovereign adoption, and two, the ability to borrow against your asset and not having to sell your asset. So when you have sovereigns buying the asset in a defensive manner, on a defensive footing, I think that could be explosive. And again, I think a misnomer, because whether it's TradFi firms or Plan B or other models, I mean, a lot of people are calling for somewhere between 200,000 and $1 million Bitcoin this year, which, to be clear, may not be a sustainable level. But even if that's a blow off top, um, that would be, I mean, just the number itself being a seven-figure number, even $500,000 Bitcoin would obviously be really interesting. I just don't think I don't believe in the diminishing returns theory, and I don't think it's that far of a reach based on past cycles where, yes, it was a smaller number, which would go into the diminishing returns aspect, but a 10 to 20x over a couple of years is just not that much of a move as far as historical norms go. So I think, yeah, sovereigns, corporates, and then the ability for everyone, and not just the ability, but to actually have holders being marketed to of like, hey, you don't want to sell your Bitcoin. We know that that's your position, and here's a product, here's an avenue for you to actually be able to do that with a reasonable rate, with a reasonable counterparty that you don't have to worry about. Like, well, I can borrow against it and I hope I don't lose it. Hopefully that can largely be behind us. At least that's my hope.
I like to, just on the topic of valuation and price prediction, I think it's helpful to always reiterate the Jesse's work around global asset value landscape and the 900 trillion of assets that exists. At a $2 trillion market cap, Bitcoin is 0.2% of all assets on Earth. So if we just take that and say, okay, 10x is to a million, that would be 2%. To me, that like 1% sounds more likely for this cycle. So that'd be like 500K. But what that doesn't assume is any sort of like multiplier, right? Like that's just like a clean transition of capital into the asset, which is obviously not how it works. So that's how you could get to, some larger numbers, is just through any sort of multiplier effect of that capital flowing from all those other buckets into Bitcoin. So I think you're right, Tim, in that like the general range people have been talking about is anywhere from 200 to a million. And I feel like that's somewhat reasonable. It's all a matter of these various variables that we've discussed around continued adoption, continued sort of air cover from a geopolitical perspective for more corporations to get involved. And then what that ultimately does is it all flows down to the individual, right? Like if the individual normie sitting on the sidelines for the past 15 years sees the government buying Bitcoin, they're probably going to think they should have some. And all of the other adoption to this point hasn't gotten them over the edge of thinking that. But the government buying Bitcoin might be the thing that gets like the masses over the edge of being like, all right, fine, I should at least have some of this. So yeah, like it could be explosive if all of those things do occur. But like I said at the beginning, like I always just tie it back to the total numbers and like the landscape and what realistically we could achieve this cycle. 1% to 2% of global assets feels reasonable if governments around the world are buying it.
Yeah, and to your point about 1% to 2%, let's rewind to last cycle where it was mostly, if not all, retail. I think we could say. There was no actual way to borrow against your Bitcoin without getting wrecked. I'll save that story, that personal story, for another time. And there was a very hostile, extremely hostile regulatory environment. And not just in the US. What about China, like banning Bitcoin mining? Like, what if you just wouldn't have had that and a few other tailwinds? Maybe you could have gotten to $100,000, $200,000 Bitcoin a couple of years ago.
Yeah,
as a blow off top. And then what would we be sitting here talking about this time? Well, we'd probably be talking about like $2.5 million Bitcoin, but you don't see that number really anywhere. So like people think I'm being extreme or maybe not doing my research, but I think I'm being reasonable and conservative in the $1 million Bitcoin.
Yeah, I mean, maybe this is a good. I don't know, Jackson is your thunder. We're in the new year. We have a few segments. One that we'll do this podcast is the single point of failure of the week. Just calling out where assets were lost or something was not aligned from like a market structure, whether it's an exchange, custodian, or individual like foot gunning themselves. So it ties into Tim wanting to hear maybe the story that you referenced. But before that, I would take the other side simply because of that. Like a market structure to go from effectively, we've been in this consolidation for a while between 20 to 60K, and we couldn't even get to past 70K or whatever the last market cycle was without people just blowing themselves up. So you have going from, again, let's call it 60, 20, whatever the number is, we went back to 17 to go to 1 million with like a lot of the things that are positive catalysts still need to be baked out and refined and not blown up to consume all that money. And then on the other side of it is like these individuals uh, are not prepared when you think about it. Most people, like a Bitcoin sitting in self-custody on a plastic device in their house. And like, what does that look like from a risk factor when the rest of the market knows that these things are sitting on their person? And what does that look like from all of the different second and third order effects of 300, 500,000, everyone here being loud about it, right? There's just a lot of like in the middle ground. And so like an example of the single point of failure, and then you guys jump in, Brian and Jackson, if I get this wrong, was I think a week ago, there was an individual that so it was Ledger, yeah, exactly here. The individual had, been stacking, saving Bitcoin, I think got almost to a full Bitcoin. And these devices, there's some made better than others. Some are the best in class, I would say, is probably a cold card. Cold card's trade-off, obviously, is you have to be somewhat technical. It doesn't take a lot of technical expertise, but it does if you're going to put a large percentage of your net worth in. Point being, with this individual, he was using a Ledger. Ledger is one of the worst, if not worst, devices to use. But I would say a disproportionate amount of the Bitcoin that's sitting in self-custody is in a Ledger simply because of how long they've been around and their brand and market penetration. They have a really bad user experience in the sense that the screen is obviously small and the address goes back and forth. But the real fundamental problem where this individual ran into it is he thought he had a seed phrase. He did not know where the seed phrase was. In the meantime, he's going to do some transition or move assets, and the pin on a ledger has 3 tries. And so after the second one, it gives you a warning. If you get the third pin wrong, it will like null out the device. And so you have to effectively set up the device with the seed phrase. He forgot his pin because he hadn't used the device, as most people don't do. Went in and did the third thing, wiped it out. He thought he had the seed phrase somewhere. Comes to find out he doesn't also have the seed phrase, loses all of his Bitcoin. So those are just some call outs and thinking about redundancies, checks, and then also just when you think about any material wealth that you have in the space, you always want fault tolerance and redundancy built into it, meaning if something happens to one piece, you're still in the game.
Yeah, just some more context on like this is a segment that we've been talking about for some time, single point of failure of the week, because we've only seen these instances like the one Michael just described accelerate in the past several months, and part of that is just a function of price, and then as the price appreciates, more attackers, more criminals are waking up to the fact that Bitcoin is a digital bearer instrument, and like the real importance of us bringing these stories to the fore and talking about them and discussing them is because Bitcoin as an asset is very different. It has these unique custodial properties, which means if you're securing it yourself, that is not only your responsibility to continue to make sure that setup is done right, but also protected in perpetuity, right? And so as criminal networks and adversaries become more attuned to Bitcoin is held on people's devices in their homes, these attacks are only going to increase. And so people need to be extremely vigilant if they are going to be keeping material amounts of wealth secured in their homes with their families. Like it's just something that is super critical and just different. Like it's different from any other asset you would have a material amount of wealth in that you have to be thinking in this super adversarial way. And so obviously everything we're doing at Onramp is attempting to solve for a lot of this by taking the responsibility of key management away from the individual for at least a portion of their Bitcoin holdings. And so there are other ways to sort of solve for this. We think our custody solution is a great one. But the reality is that we are only scratching the surface of these types of attacks and these types of sort of vectors for people losing their Bitcoin. And just tying it back to like the importance of it, it's like, this is a digital bearer instrument. It's finite. If you screw it up, if you lose it, if you foot gun yourself, or the exchange that you're holding on it, holding gets hacked, or you get social engineered, and we've seen a ton of those instances as well. It's just gone forever. And so like it's very different than any other asset that you'd be storing wealth in. And back to Michael, your earlier point when we were just talking about adoption, it's like these realities are why we're not already at $1 million per Bitcoin, because there are these extreme custodial realities with the asset that we're just beginning to grapple with and figure out better solutions for. And so just wanted to give that context for this segment that we're going to be doing going forward, to just highlight these. And it's really, to be totally honest, it may come off as like FUD or fear mongering, but it's really, that is not the purpose. The purpose is to just highlight the serious nature of holding material amounts of wealth in this asset, and what you need to be thinking through and how to defend against it. But yeah, Jackson, do you have any thoughts?
Well, just to add one other piece on that, to Brian's point, like a lot of this stuff we talk about, we've been a little hesitant to share more of it because it does come across as whether it's talking the book or FUD. But the reality is, this ties into it's effectively, there's a broken part of the market structure in Bitcoin, because the only thing you ever hear people talk about is you have to hold all of your wealth in 12 or 24 words on a plastic device, or you have to leave it on a custodial ETF. And there's effectively a better way now. And what ultimately is going to happen, we know it's going to happen. We've seen this as the price appreciates, and we hear about it anecdotally, the attack vectors grow. And because we're just starting this segment out, we'll do a 2-4. I pulled this other one up because we have no shortage of these, like in our Slack channel, where this one was an influencer that was loud online about holding Bitcoin. And I guess they were chasing his wife. She passed away in a car accident because the bad actor was looking for, I guess, to kidnap her or whatever. But when I say there's a broken part of the market structure, it's because in no world can you take Jeff Bezos or Elon Musk's family member, them, and tell them to liquidate all of their shares or move all their houses or whatever assets that they hold and move them into the person's name. There's all of these different like measures in between that taking place, and then the perp getting found or the assets being moved. But in Bitcoin, in digital assets, that historically hasn't been the case. So if you take somebody or their family member or their house, it's that digital bearer asset. And so when we look at 15 years from now and the asset's millions of dollars, fully believe that we'll look back during this period and be like, oh, that was kind of strange that we just like held all of this on our person, or we left it with Coinbase. And it's just because the asset's been so small that we haven't had that market awareness yet. So we're kind of peering into the future. It's our view. And if we're wrong, then I just don't see how any other angle really comes about. Our view is any other angle. If the asset's millions of dollars, there needs to be other constructs that exist. And our job is to help and kind of like paint that picture and provide the products.
And said another way is, we'll look back and say it was insane that we allowed a single point of failure to exist in our Bitcoin setup for our material amount of our wealth. And that is whether it's either side of the spectrum, self-custody, foot gun, being attacked in the real world, or you're holding it on a single entity, and something happens there where you end up with a zero. In both scenarios, you have a single point of failure. And so if you can work towards eliminating the single point of failure, you're de-risking ownership of the asset. Full stop. Going forward, you can feel better about it into the future. You can reduce your own personal attack surface in the real world and just feel more confident that you have redundancies and fault tolerance in place where you're not going to be out of the game because of a single point of failure. And so that's just to reiterate why we want to highlight this stuff.
And Tim, this is like an angle of the market structure that allows for the price to actually grow. So it's kind of a meta angle, but like we hear from this, and this was always kind of the idea, is as that wealth concentration grows, it becomes very uncomfortable if you already are uncomfortable with the custody solution. So imagine you have a million, it turns into 10 million, it's 95% of your wealth on a ledger. Well, it's natural human like psychology to say, let me clip off a little bit to go buy something else, because if I lose it all, at least I don't have that. Like we hear this from clients of ours. But then they're ultimately like, no, I feel very confident in this solution, so I can let that grow. And so that's part of this like natural market structure of like, well, if you don't feel confident because an ETF is still paper, you still have the taxable gains, you can't take delivery, well, you're going to clip a little off and go into something else. So that's a component of like just naturally building more robust solutions.
Yeah, I think we could probably have an entire pod just dedicated to this aspect of it and stories around it, because part of what, like, I'm a curious person. I always want to learn and obviously continue to educate myself. So along the way, since 2021, I've attempted to buy Bitcoin on as many platforms as humanly possible. Sitting in the state of New York, some of those platforms were not available to me, and that probably saved me tens of thousands of dollars, if not multiples of that. Um, but also just having that experience of like, if you buy a bunch of Bitcoin on Cash App and then you want to sell it and take it off, well, you can only pull so much out per day or per week. And so that's some kind of safeguard. I think for someone that's getting started and like, oh, we'll just buy the ETF or just have it in self custody. Okay, those are solutions. Just have it on Coinbase. I mean, I don't know anyone that is getting phone calls from scammers saying, trying to like basically get their login to their BlackRock or Fidelity account. But I was walking on the beach in Miami just a couple days ago, and I'm declining a call, and they're leaving a voicemail pretending to be Coinbase trying to steal my Bitcoin. So like, and like it literally happens to, I'm assuming, hundreds of thousands of people every single day. Like, why is that where we are? That's not okay. That's not where I want to be. I want to have some in self custody. I want to have some somewhere that I can not have to ask somebody else permission to get to it. But I want to have most of it in a solution where I it can grow by 10x and 100x and 1000x, and I feel very confident in the solution. And I think that's where the multi-signature, multiple custodians really comes into play. And until you have a little bit of that experience, it's probably not going to be important to you. But for me now, it's extremely important. I mean, it's just ridiculous that, we're kind of at this point where literally people can be calling your phone trying to steal your Bitcoin from you. And like, I don't even have that much on Coinbase, but that's what's happening to me. So I can only assume that's what's happening to a lot of other people.
Yeah, no, it's very true. And the idea, if we're right about we're early for Bitcoin, right? 0.2% of the global asset landscape, then we're also early for Bitcoin infrastructure, custody, and solutions in the market. And so there's just a recognition that, not to rehash the same points, but if we're early in Bitcoin, then we haven't seen all the solutions that will be brought to market, and there will be a need for more resilient solutions to protect the asset from when it moves from 6 figures to 7 figures to 8 figures. And so that was just a recognition for building this business. Of course, it sounds like we're talking the book, but I chose to join Onramp because I saw the value in the solution for myself as well. And all the reasons that we discussed today is why I use Onramp for my personal custody for a portion of my stack at this point, certainly over 50% of my stack. And I'm okay saying that because I know I'm protected from the risks that I have to worry about if I'm using self-custody. And so I'm okay with being forefront and transparent about it because I'm not subject to the same risks if I use a multi-institution solution. And we flag the single point of failure of the week, not because it's funny or not because we want to make light of it, but it's because we don't want this to happen to more people. And so it doesn't mean, if you're someone who's thought through your self-custody setup for hundreds of hours and you're very diligent about how you manage your seed phrases and geographically disperse assets, then that's great. Maybe you can continue to do that, and maybe you're in the 0.1% for people who can do that. But the reality is most people who have gone down this path have really not given it the time and attention that it deserves, and myself included. I mean, I did it for a while, pretty half-assed, and I'm fortunate to have not lost a serious amount of Bitcoin. Of course, I've lost some along the way, but I think this is just a call and a reminder for people that if we're all going to be bullish, we think SBR happens, we think that Bitcoin price is going to be multiples of what it is today a year or two from now, that we just need to think a little bit more seriously about how we manage the asset for ourselves or for businesses.
Yeah, and Tim, the exciting part about our relationship, if folks haven't, maybe picked up, we'll be sponsoring and partnering with you on the Treasuries pod is growing together. When you think about, like, we talked about the stick version of why folks use us is like the foot gunning security, but there's also the carrot, which is like, this is a financial instrument. This is money. This is an asset. And individuals are going to want to treat it as such, and they're going to want to buy some. They're going to have tax advantaged accounts. They're going to lend against it. They're going to want to do all these things that we have planned or currently have in the market. And so you just need a private bank to be able to do that you can trust, that understands the space. Because at the end of the day, like, ultimately, this is a innovative, disruptive asset. And if you take like a 2D version of it, i.e. how everything else has been done, you're pretty much on a long enough time horizon not going to be pleased with the results of your counterparty. That's just what 15 years has shown objectively. And so our approach is mixing that traditional finance, understanding, the capital markets, but then infusing that Bitcoin lens enough to keep everything honest. And an easy example of this is you generally want to work with a custodial partner or collaborative custody partner that can't unilaterally move the money or lose it. Like, that is a very fundamental philosophical thing that's very simple, but you only see a few firms in the space do it, because it's ultimately them telling you, like, they at least understand enough that if anybody ever came to them, the worst they can do is not sign or lose a key, but they can't lose your assets. They're okay. And that's a different shift than traditional finance, holding the asset, net interest margin, and all the things that we've seen kind of fragment the underlying infrastructure. And if you go and park this digital bearer asset in that infrastructure, it's just a recipe for heartache at a certain point on a long enough time horizon. At least that's our stance, and that's what we build towards. And a lot of the folks that understand what we're saying love it, because it's like how they've been thinking, and they've been sitting on the sidelines with that metaphorical pet rock looking for solutions like this.
Yeah, I'd really invite people to learn more about these sorts of solutions. I think, without going into a long 5-minute detailed explanation, the fact that there is the ability for someone to have as part of their plan that it would require in-person verification in order to move the asset is huge. I mean, you talk about some of the wealthiest guys in the world. Yeah, there's no one person or one institution that you could just be like, hey, give it to me. Well, I literally can't. So, talk about being able to sleep at night and feeling secure and feeling like you have a solution on your side that is literally, once you're educated on it and understand it, then you can appreciate it. And really excited to be working with you guys and appreciate the opportunity.
Yeah, it's a topic for another day, but it's also a great discussion around can you imagine any other solution for corporate treasuries? They literally have financial controls for this exact reason, for somebody not to be able to send wires out and then leave the firm or have some kind of churn. So as treasuries adopt this, they're going to naturally have to de-risk it as well.
Well, Tim, appreciate the generosity with your time today. I know we went a bit over, so thank you for carving out the time to speak with us, and really excited about the partnership we have with you. For those who are not familiar with the work that you're doing, where would you like to point them to find out more?
I'm on X, formerly known as Twitter, just under Tim Kotzman, and appreciate the time and look forward to 2025.
Thanks, Tim.
Awesome. Thanks, Tim.
Thanks, boys. Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.